Welcome to ETF Edge, your go-to place for all things exchange-traded funds. I'm your host, Dominic Chu. Now, thematic ETFs, all the rage these days. Then the foundational AI trade of the Mag 7 stole the spotlight. But are thematics set for a comeback in 2026, all thanks to, what else? AI. Joining me now for the conversation is Ryan O'Connor. He's the CEO of Global X ETFs, alongside Mike Akins, the founding partner over at ETF Action. Gentlemen, thank you both for being here with us right now. Maybe I'm going to start, Ryan, with you first, and right off the bat, just ask how much of a big deal AI, artificial intelligence, has been to this whole idea, the concept of thematic investing.
Look, it has been a very big deal. And ultimately, from our perspective, we think the revenue gains are real that you see. We see the productivity gains being real. And ultimately, we see this as being a transformative trend and theme that we think is going to support markets and our business over the long term.
Just how much has it been a driver of the flows that you've seen into Global X? Now, I'm going to put a timeline that's not exact, but maybe roughly the last 2 or 3 years. That's when things really took off for AI.
Sure. And look, I'm sure Mike has got some views on this as well from his perspective. I would say AIQ, which is our flagship AI fund, is now a $7 billion fund, of which we've done $3 billion in net new flows just this year. Even with last week's headlines around potential questions around AI valuations, et cetera, we saw over $100 million in net new flows just last week alone. So it's been a real driver kind of the story for us. And as we've talked about, not just about the broad-based AI story, we're getting a little bit more granular as well, right? Things like data centers, things like energy to fuel a lot of this demand, clean energy from uranium, liquid natural gas, as well as the chip stack as well. So it's not just about the AI story, it's broadening and getting more specific at the same time.
Wow, so broadening and more specific at the same time. So Mike, I'm going to throw this one to you. If you look at the bigger picture for macro investing right now, thematically with regard to ETFs, it has been very much about AI recently. But if you take a look at the trend overall, it's been a pretty decent evolution from where we were, say, 10, 15, 20 years ago, when everything was straight passive, large level index worthy. Now, a lot of that growth, maybe understandably so, is less away from that and more towards active management and thematic investing. How big of a deal will this be? And at some point, will active and thematic type investing overtake the passive side of things in ETFs?
So I think I wouldn't call thematics active yet. I mean, I think there's both ways to play it. You can play it active or passive. I mean, Global X is a leader in providing passively managed thematics. They're just providing narrower passages into the market to get exposure to exactly that theme you're looking for. I think that's the biggest thing we've seen since, say, even in just the last 5 years, where we think about kind of the arcade day when we saw record flows into thematics. Today at ETF Action, we have 12 categories within thematics and then dozens of subcategories within that. You guys talking about AI, disruptive tech, has seen almost 20 billion in flows year to date, but 15 billion of that has ETFs with AI in the name. So that's definitely driving it. But I think part of the evolution is sectors are not so easily defined anymore. So you just think about thematics, it's a way to get more niche within the marketplace and those subgroups or subsectors, industries of the marketplace, which allow asset allocators to really drive into a theme that they're looking at. Of course, this introduces crazy tracking area. I mean, we have nearly 400 ETFs at ETF Action that we classify as thematic. And, the top performer is up over 150% year to date. And there's several that are, negative 10 plus 10%. So this introduces a lot of due diligence, but I think that's what's great about having firms like Global X who focus on this area of the market and provide the research, because, there are long-term themes that you want to be invested in, but there's also tactical trades. And with, that many ETFs, part of what you're seeing is you're seeing flows move within thematics like we're used to seeing flows at the sector level.
Okay, so let's talk about that. Because, Ryan, if you take a look at the way things are shaping up right now, there is a lot more activity. I mean, at this point, I think I saw a stat that there are more tickers for ETFs right now than there are for single stocks within the market. That's just how more robust things have gotten. A lot of that is due to thematic investing. A lot of that is due to active and the kind of propagation of some of those types of products. I wonder, though, from a trading perspective, just how much do you feel as though your client base at, say, a Global X caters to some of those more active traders who like to kind of take very tactical short-term moves around these themes, as opposed to those who say buy an ETF that's thematic and then hold it for a duration of time, maybe months or even a year or plus?
Great question. Look, from our perspective, the themes that we get most excited about and the themes that we have in our lineup, we see as being long-term secular trends that over the long term our clients are going to stick by us with and ultimately add value within their portfolios too. So look, there's always, to Mike's point, going to be tactical opportunities around the edges. But at the end of the day, when we come with an ETF and a theme, our investors and our clients can trust that we are coming with something that we have thought about distinctly, and over the long term believe that it's going to do good things in their portfolios for them. So that's how I would think about that.
So Ryan, if you take a look at the suite of products that you have,
sure.
Do you notice that there are certain types of products and certain types of themes that you have products tracking that tend to gravitate or try to draw in more of those tactical short-term traders as opposed to those people who are, say, more longer-term in focus? Can you see the kind of trading activity that goes around some of those types of products?
Yeah, look, absolutely. We can see on a daily basis, one of the beauties of ETFs is the fact that you can trade them throughout the day based off of what your views are. But I would say some of the themes that we are most excited about that we're seeing happening right now, real time, we're seeing really persist over the long term. One example is global defense technology, right? So this is a product that we launched at the end of 2023, in September of 2023. We're already over $5 billion in assets. We've seen $3 billion in net new flows into this product. This year is the first year ever that all NATO countries have finally met that 2% of GDP as a proportion of their defense spending. And they've doubled down on that, committing to, by 2035, seeing 5% of GDP spent on defense. So that's an example of something that we see over the long term persisting. And ultimately, our customers have looked to us for those types of exposures over the long term.
Mike, it's an interesting point here because these themes, they move about, they shift around based upon kind of prevailing even headlines or investor sentiment around certain types of areas. From your perspective, as you track the kind of macro picture and all the funds that you keep at least tabs on, what do you think the shelf life is for some of these types of themes? We know that there's not a huge amount of track record for thematic investing, but just how much are investors letting some of these themes play out? And just when do they have maybe their patience run out for some of these before they exit? Do we feel as though there are secular trends that people will bet on the long term for, quarters, years, and maybe beyond, or those that they kind of think of, they're just trying to capitalize on the momentum and price action for the moment?
So I think there's always going to be both, right? You have tactical traders that are always looking at different dynamics, and that's a big part of thematics. Tactical traders love them. They're going to use them. It's, at the heart, ETFs are an allocation tool. Some are designed to be used long-term. Some are designed to be more shorter-term. I think to Ryan's point, most of the themes that we look at across the marketplace are designed to play out over a long period of time, but there's going to be ebbs and flows in that. And I think just look at disruptive tech as an example. We have that as one of our 12 baseline thematic categories at ETF Action. And there's about 12 subgroups within that. But a couple of the more mature, if you will, themes in that, some of the original thematics that come out, well over a decade ago, like cloud computing, next gen connectivity, those have seen, multi-billion-dollar outflows over the last few years. And one can argue it's because those are very mature themes now. They've made their way into the broad indexes and at scale. So you already have allocations to that. So I wish I could put a better time frame on it. I think every theme is unique to itself. So some are going to play out longer than others. But I think that's part of the story with this space is that, yes, there's definitely, the idea I'm going to invest in this because I believe it's going to play out over the next 3 to 7 years. It's a long-term growth opportunity for my portfolio based on whatever macro catalyst. But at the same time, themes can run very, very quickly. So you should be, taking advantage of, hey, if it goes up a ton, you still want to have allocation to the theme, but maybe take some off the top. And vice versa. You see a lot of themes that get under significant pressure, and that introduces an opportunity to maybe leg in a little bit more.
So Ryan, from that perspective then, let's talk a little bit about just how much your client base is segmented out. You kind of understand who is investing or purchasing your products. Given what we just heard from Mike, it sure seems like there needs to be a little bit more hand-holding these days, a little bit more education, a little bit more perhaps just dampening of sentiment, given some of the swings that we're seeing. How much now are advisors or the institutional community using these types of products for their client portfolios, as opposed to, say, a retail investor or trader, say like myself, just buying the product saying, I want to express a view? How much of that is an RIA driven?
It's a great question. So the majority of our client assets, I talked about Global X approaching $75 billion in assets. The majority of those assets are coming from intermediary and institutional type clients. And for us, I think some of the most exciting days that we have at Global X are when we engage with those clients more and more to help them sift through and understand what's going on in the ETF universe, but also start to utilize ETFs in new and different and interesting ways. The data that Mike and others know a ton about in terms of ETFs taking share from other registered vehicles is exciting, right? We continue to take share from mutual funds, continue to have record product launches, continue to have record flows over the $1 trillion number so far this year. But for me, some of the most exciting things are some of the anecdotal conversations we're having with clients around taking share from things and product types that aren't really going to be captured within that data. So things like structured products, things like swaps, where we've got sophisticated intermediary institutional customers coming to us saying, I want a basket, I want exposure in a lower cost, transparent, tax efficient wrapper. And ETF is, of course, perfect for that. So it's a long-winded way to say intermediaries and institutions continue to broaden the way that they're using ETFs, and it's exciting for us.
Brian, to follow up on that,
Yep.
just how quickly, so you're a fund manager, you manage these assets, you come up with the concepts, you put
Yep.
these portfolios together. What is the lead time now? When you talk about, say, a client or a group of clients bringing you a set of ideas that you think, hey, this could be a good product for us.
Yep.
What is the lead time between conceiving of a strategy and a type of product before you can actually bring a viable one to market in the Global X family?
It's a great question. Of course, it depends upon what that idea is and where it is kind of in the ideation phase. But what I would say is for very well-baked ideas that we have an idea as to where we're going with it and what the customer ends up wanting, there's a 75-day clock at the SEC in terms of our putting in a filing and working with the SEC to get these listings out the door. So it's quite it's a quite quick turnaround, and ultimately there's never been an easier time to launch ETFs based off of the ecosystem that's come together to support it, given the flows, and it's an exciting time for customers, no question.
Mike, this is also a good point to bring up with regard to just how many options there are out there. At what point do we feel as though it is overwhelming, just the amount of product that's being brought to market here, and just how much more do, say, retail traders or investors have to rely on professional advice or some kind of a portfolio manager to help make decisions for this kind of thing? Do you feel as though that's more of a secular trend because there is such a bigger universe of these types of products to navigate towards?
Well, first and foremost, I believe that, the professional aspect brings more than just the investment management to the table. There's a whole ton of reasons we won't get into today why investors should think about having professional management help from that perspective. But as the market evolves in terms of products, so does the technology, right? So there are many tools out there, many data sets that allow you to look under the hood. But every time you see a new ETF come to market, it introduces significant tracking error from just investing in the market. So we believe strongly at ETF Action that the growth of the ETF market is overwhelmingly positive to the investor experience. But with anything, with choice, is opportunity also risk. And I think you do have to look beyond the name of these portfolios. We guys were talking, we talked AI as we started, but just within the 18 ETFs that we have classified in our AI bucket of disruptive tech, there's over a 60% divergence of return in those 18 names year to date, right? So it's just really important that you have to go beyond the hood. And then, of course, you have the whole financial engineer side of the market, which is really taking off. And some of it is good, but a lot of it is going to be noise.
Well, it's a lot of it, too, is this advent and the development of structured products within ETF format. There are defined outcome ETFs and everything else that go along with it. Maybe, Ryan, as we talk about that, we brought up the idea that many of these products are tied to indexes and that some of these investors want these products because they are passive in nature and track an index. I guess my question is, how hard is it to come up with an index? And then what exactly goes into that process? And then the back testing or simulation that goes along with it. When it comes to that, how much do investors have to scrutinize the kind of index and methodology that they're investing in with an ETF product?
It's a great question. I think the short answer is it's really important, and it's a huge component of what we do at Global X and how we think about working with our index provider partners to come up with thoughtful exposures for our clients. To Mike's point, we've seen a massive explosion in the number of products that have been put out there. We think it's really, really important for ETF sponsors such as Global X to think through, first of all, what those exposures are in terms of what can be transformative, what is useful over the long term for clients, to do that early, right? One example we talk about is AIQ. We launched 4 years before the public release of ChatGPT, so that's important. But then the second thing that I would say is just constantly being thoughtful around how you are structuring that exposure when you determine that it is something that we think can be transformative. That conversation and that work that we do with the index providers is really at the core of providing really durable, interesting, and well thought out themes.
All right, so those themes, well thought out that they are, Mike, I'll toss this one to you to kind of close things out on your conversation here. What exactly is, in your mind, going to be the next big frontier when it comes to thematic investing? AI may or may not have legs depending on how the market views things. We saw a little bit of that corrective action, if we can even call it that, over the last couple of weeks. But if we're going to look beyond AI, what are some of those areas of the market that you think will be the next big thing post-AI? And what exactly are you tracking with regard to how those products develop and come to market?
Yeah, so I think from a product development perspective, we're keeping a close eye on tokenization and what does that mean in terms of the ETF structure. But from a pure investing, like what do I want allocation to? I do think, the pendulum always swings. And we're keeping an eye on a lot of the reshoring products that are out there. You're seeing kind of the old school infrastructure, industrial products that, have not done as well over the years, but there's a big drive, kind of away from globalization into this reshoring concept. And I think that has legs. I think there's reasons on policy front, there's reasons on consumer front, why you would start to see that take shape. And it's kind of funny because you go full circle. Some of the names that you wouldn't think about when you start talking thematics, I think are actually going to start getting a lot of the conversation as we move into the next year and beyond.
All right. And to close things out with you, Ryan, at Global X, you run a shop that puts a lot of kind of thought into these ETF products. What exactly is going to be that next thing for you guys? What's top of mind for you on your radar, so to speak, with regard to what those next products could be?
Oh, look, I would like to start where Mike ended there. Infrastructure is something that's near and dear to our heart, based off of PAVE, which is our largest ETF in the market currently. Tariffs have been an interesting one in terms of, in our view, haven't had a massive impact on the consumer thus far. But to the extent that they do, we think some of these reshoring efforts that you can get through some of these infrastructure plays is an interesting one. So that's one that I would say. The other theme that we talk a lot about is electrification, right? The idea of all of the things that are going to be required for us to continue to support this AI boom. The electrification of the U.S. economy is certainly one of them. So you can get that exposure through ZAP, our ETF there as well.
All right. Mike Akins, Ryan O'Connor, thank you both very much for the conversation. It's one that we want to continue at some point in the future, so please come back and see us. Now, we've asked Mike to stick around for the ETF Edge podcast. You can catch that and all of our other content over at etfedge.cnbc.com. Thanks for watching. We'll see you next week.
Get the ABCs of ETFs with the ETF Edge newsletter. Your weekly update on the hottest trends, expert analysis, actionable ideas, and exclusive insight from top industry experts. Sign up now at cnbc.com/ETF Edge newsletter.